Hello, everybody. This is Greg Gossett from Gossett Trading and Mentoring Live. And today is Tuesday, July 30th, 2019. We're now in the last hour of the trading day. As I mention every day, I really do believe that the closing prices of the day are the most valid prices of the day, and therefore the best prices to make your buying and selling your buying and selling decisions from. So I'm mainly a end of day trader. Occasionally I will take a signal intraday if something looks really good, but I would say 95% of the time I really just wait till the end of the day, see what those prices are, see where the market makers, see where the large institutional financial firms move the market, and then base my decisions from there. So, all right. Well, interesting day. We opened up way lower, and we've had pretty much a rally the rest of the day. We're still negative on the indexes, but should be interesting day. We have Apple earnings after the bell. I assume that is going to cause some volatility, either to the upside or the downside. So let's keep that in mind. And as always, be careful and position size correctly, right? So let me make sure we're coming through okay. If you guys can hear me okay, please let me know before I get started, just so I know. All right. So anyway, listen, the format for today is, first of all, we're going to go ahead, we're going to run the U.S. legal disclaimer, get that out of the way. We're going to come back. We're going to take a look at all my current positions. We're going to look at when I bought them, why I bought them, and how I'm going to manage them going forward. And then after that, we are going to do a short little segment on some trader psychology, because as you know, I believe that trader psychology is the most important part of whether or not you're going to be a winning trader or a losing trader over the long run. So that's why I like to mention it every day. Hopefully some of this will rub off and you'll start to internalize this. And then after that, we're going to go through, we're going to take a look at all the stocks in my watch list. We're going to go down through each one by one. We're going to analyze support and resistance levels. We're going to analyze moving averages, RSI, MACD, ATR channels, all sorts of stuff. And if we're able to find a particular stock at the end of the day where I get a multitude of signals that come together in a confluence, then I may enter a long position at the end of the day. So we'll just have to see. And then after that, after the market closes, if anybody has any questions whatsoever about anything I discussed today, I'm happy to clarify. And then also, if there are any stocks or symbols that you would like me to look at, I'm happy to give you my humble opinion. So that's the plan. Hey, Steve Burns, sounds good, Greg. Oh, good. Glad to know. Sometimes you never know. It looks like everything's working, but sometimes, like, I have the mic off or something like that. Thanks for coming, Steve. I appreciate it. It's always nice to have you here. I hope you're doing well. And so, yeah, it's going to be an interesting day after the bell, huh? And then JT is here. Hey, JT. Good to see you. Thanks for coming back. I appreciate it. Always nice to have you here. All right. So, first of all, like I said, let's go ahead, just run that U.S. legal disclaimer, get that out of the way, and I'll be back in about 40 seconds. So hang tight, please. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much. All right. All right, so first of all, let's just go through my current positions and take a look at where I bought or when I bought them, why I bought them, and how we're going to manage these going forward. All right, so first on deck is Honeywell. I did buy Honeywell yesterday, the 29th of July, when we had this nice higher low V2. So we make a low, we rally up, that rally fails, we come back down, but instead of continuing to go down, we actually had a move up, which triggered this nice V2. Here is day 1, day 2, day 3. Day 2 washes out day 1. And the significance of a washout is you want to see the market go down and test lower prices. And if it's able to reverse off of there, then that's always a good sign, because now in your very recent past, the market just told you it wasn't in, there were no more sellers down here, at least that day, right? And then the next day we bought yesterday when we confirmed the V2, because the day 3, day 1, day 2, day 3, day 2 washes out day 1, day 3 closes above day 1. Not only did it close above day 1, it closed above the 50 RSI, it closed above the 10, the 5, and the 20 EMA, which is also a good sign. It happened here in the value zone, and then yesterday it did bounce off the 1 ATR channel as well, so that's good. So we did buy it yesterday at 174.65. It is down today. It was higher a little earlier above our entry point, but now it is down. So being that I just entered the trade, my initial stop on this particular trade is halfway of the washout bar. This is the washout bar. This is the day 2 bar. Halfway is right about here. So if I get a close below the halfway 173.13, I'll just go ahead, take the loss. It's important that we try to keep our losses small, let our winners run. So if I'm wrong quite small, but if I'm right, you can see I've targeted the 70 RSI up here. Doesn't mean it's going to get there. It might have some red flag bars along the way where I may just elect to go ahead and get out of the position. But you have to have kind of a ultimate profit target, but you have to look for red flags along the way. So conversely, if this doesn't do much in the next few days, I'll probably just go ahead, exit it for a scratch trade. Because when I take a trade, these V1s, V2s should go your way fairly quickly. But if you're hanging out for 3-4 days and it's not going, in my experience, that's not a good sign, because these should go right away. So let me just take a look here real quick at something. Okay, and okay. All right, Mount Doji's here. Hey, buddy. Good to see you. I'll go over those 2 stocks that you emailed me about earlier. I'll go through those when we're going through the watch list, okay? But thanks for sending those over. All right. So that's the plan. That's the plan on Honeywell. IWM. So IWM, this was a bit of an interesting trade. The 10 SMA, 50 SMA cross is a good back-tested long-term moving average crossover approach to trading the IWM, which is the Russell 2000. So I did buy back here on 628 when the 10 did cross above the 50. This is a completely mechanical trade for me. This is a robot trade, but I did elect to only take a half of position here because the entry came over the second ATR channel after 2 strong days moving up. We had that previous high right behind us, so I did take a half position. Next day, it immediately gapped our way. We got out of about 25% at a profit. Ever since then, it moved back down with just moving sideways. We did take a couple profit targets on the moves up. But then when we started to get back into the value zone, it started to become interesting because you can see how we're starting to move sideways here, showing that there are no more selling pressure going down. And then here on the 23rd of July, we had this nice V2. Here's day 1, day 2, day 3. Day 2 washes out day 1, day 3 closes above day 1. So I did enter the other half. I only took half over here with the option of entering another half if I got a good setup, and you can see it was a good setup. So I did put on the second half here. Next day had a great day. We moved it. I think we hit 3 profit targets the next day. Next day right back down, next day right back up, hit another 2 profit targets, next day down, and then today, as you can see, it opened up lower, much lower, and it's had a big reversal. We did hit 1 profit target here. So, since the entry, it really has moved sideways, slightly up, but we've actually had a pretty good profitable trade on this because of the exiting at the higher prices, entering at the lower prices, exiting at the higher prices. So, this is a mechanical trade. If it keeps going up, I'll just keep scaling until I run out of shares to sell, or the 10 crosses back below the 50. But nice that we did hit 1 profit target today. All right, the SPY. Well, as you know, I do buy the SPY every day at the close, and I sell it the first thing in the morning. And I'll get to why I do that in a minute. But yesterday, we bought at 301.46. This morning opened way down here at 299.90 is where we got out. So this was a losing trade. It was a pretty significant losing trade. But if we have any new viewers today, I just quickly want to go over why I do this. I know it doesn't seem very tactical. There's not a lot of thought put into it. It's just buy at the close, sell at the open. But the reason why is based upon a study from Liz Ann Saunders at Bespoke Invest. But if you do the opposite of what I do, if you buy the SPY at the open first thing and then you sell it at the close each day, so you buy at the open, sell at the close, since 1993 you would have actually returned a negative 13.9%. But if you do what I do, which is I buy the SPY each day at the close and then I sell it first thing the next morning, you would have actually returned a 634.2% return up until January of 2019. So what this shows you is that all the increases in price in the S&P since 1993 have happened in the aftermarket and the pre-market session. So, there really is an edge to doing this long term. You can see the blue line here is the buy in the afternoon, sell in the morning. The orange line is the buy in the morning, sell in the afternoon. But you can see over time, drastically outperforms the buying in the morning, selling in the afternoon. I mean, absolutely drastically. I mean, it's a very clear edge. And so, when you have an edge in trading, what you want to do is, you want to enter the trade with the edge, get out. Enter the trade with the edge, get out. And over time, let that edge play out for you. You can see, it really has done well. It has had drawdowns. That's why it's important to take the long view on this kind of trade. Position size correctly, very small position size, maybe 5% of your capital, 10% of your capital. But I've been using this approach since February 26th, and it has done very, very well. There have been drawdowns. The month of May, there was a big drawdown. But still, since February 26th, it's been a really, really nice return on the money. So that is why I did buy it yesterday at 301.46, but this morning, unfortunately, it gapped lower. We got right out, which was quite rude, I might say, and then reversed back up. So I will be buying this again at the end of the day and rinse and repeat, right? All right, here is UNH. This is United Healthcare Group. I did buy this back on the 26th of July. The reason I bought it is, we had this move up, we came back down, still in the value zone, closed below the 200-day, next day closed back above the 200-day, and on top of that, it also triggered a V1. Here's day 1, day 2 washes out day 1, day closes above day 1's close. also closed above the moving average, or also closed above the 200-day moving average. Also was a higher low, which is also good, and it rejected the 50 and it rejected the 1 ATR channel. So nice setup here. 200-day below us is our initial stop. There should be some support there. Yesterday it did move up just a little bit. Today it went down with the rest of the market and reversed back up. It's actually positive on the day. And if you guys can tell, we have now had a higher low V1 and a higher low V1, which is, interesting. And then we also, we rejected the 200-day moving average today as well. So that's also positive. So it is up today, not a lot. We are profitable on the trade, no profit targets yet. But as long as it stays above the 200, I will keep this. If we get a close below, I'll get out of it. If it continues to move up, I'll continue to scale. If we start extending about, 1 ATR possibly away from my entry, then I will start tightening up my stop with some other kind of trailing stop. So that's UNH. All right, VIX. So I did buy VIX back here on the 25th of July. And why did I buy it? Well, 3 reasons. The previous day's bar, we went below a 30 RSI. Next day, closed back above a 30 RSI. The previous day, it was below the 3rd ATR channel. Next day, closed above the 3rd ATR channel. We also had this V2. Here's day 1, day 2, day 3. Day 2 washes out day 1, day 3 closes above day 1. So those are the 3 reasons why I bought this. I entered the position in the VIX. And additionally, we do have a double bottom with a bullish divergence. Here you have a low. Do you see the MACD bars? This indicates what the momentum is to the downside. So we make this low, we have another rally. Now we make a lower low, but the MACD bars are more shallow. This is indicating that the momentum of the move is slowing down. So if you have a bottom, a rally, and another bottom with a bullish MACD divergence, it's not telling you it's going to go up necessarily, but it's telling you that the move is starting to slow. And if the moves are starting to slow, there's a good possibility that may continue the other way. So actually 4 reasons why I entered this position. I bought it. Next day immediately went against me. Yesterday did get up a little bit. I think we hit 1 profit target yesterday. Was it VIX? No, I think that was Oracle. Yeah, I don't think we hit a profit target yesterday. But today we definitely hit a profit target here at 22.25. So this is up 1.74%. This is a big mover, everyone. That's why I always position size much smaller than I would in a regular type of position. So I entered a quarter of a position back here. Yeah, this has been a tough trade for me because I also took the same trade, almost exactly the same setup here, hit 1 profit target, thankfully, then came back down, and it stopped me out of the position. So this has been, the one kind of main loser I've had for the last couple weeks. But I know it's tough when if you're in a position, you give it 1 shot, you give it another shot, you fail. It's tough to make the next trade. And, I don't blame you if you just decide to get onto something else. But this particular setup, it was hard to argue with the way I trade of having a V2 under 30, under the 30 ATR channel, over the 30 ATR channel, over the 30 RSI. So anyway, it is picking up today. Like I said, we hit 1 profit target. So we'll see what happens. I'm sure this is going to move. Either today after the Apple earnings or tomorrow with the Fed meeting. So this is going to be an interesting couple days of trading, everybody. Okay. All right. So that is it on the positions. Murat's here. Hey, buddy. Good to see you, Murat. Thank you for coming. Hello. Hello to Norway. All right. So, before we get started going through my watch list, I like to do a little trader psychology today, and this is from our good friend Steve Burns at sjosephburns on Twitter. Guys, it's like the best trading and financial channel on Twitter. So if you have not subscribed on Twitter, please do so. Please read all of his posts. It's going to make you a better trader if you do. And so I would highly recommend it. I've studied with Stephen Burns for, boy, I can't even remember now. It's over a year, I believe. But, I consider him a mentor of mine, a teacher of mine, and a friend of mine. So, and he's right here in the channel today. So thank you so much, Steve. All right. So listen, Steve says here, all through time, people have basically acted and reacted the same way in the market as a result of greed, fear, ignorance, and hope. This is why the numerical formations and chart patterns reoccur on a consistent or constant basis. This is from Jesse Livermore. Is a very famous trader, reminiscence of a stock operator. That book was basically about Jesse Livermore. But it's true. When someone tells me this chart pattern works, I know a lot of people just go, okay, well, this is the chart pattern. But I really like to understand what's going on from a psychological standpoint underneath that chart pattern. And because really what everything you see when you see a chart pattern is charting emotions of people. That's really what it is. I mean, you're charting people's fear and greed and ignorance and hope. And that is, and what Jesse Livermore is saying here is that people are people, and we're always going to have, these emotions. And that's why you have these setups and these patterns that happen over and over and over again. So, let me show you a quick example of what I mean. So, we're in Honeywell. We have this higher low V1. So, okay, it's a higher low V1. You should take it. But what I like to understand about this, the psychology of what's going on here, is that here you make a really low, a strong move downward. Well, some people bought this, obviously, right? Now, when it rallies up to here, if I bought it down here, I would certainly be looking to sell it up here, right? Unless it kept going. But if it stalls, moves down, I'm just going to go ahead and lock in my profit. So this is a psychology. People buy down here, they see it slowing. Okay, I'm going to get out. That is what moves this back down, right? But now if we're strong enough to keep moving up with this V1, now all the people that bought here sold here. Now when it starts moving up, all the sellers are gone, right? So the sellers in the equation are gone, which makes for easier movement to the upside. So that's what I mean by the psychology of what's happening with the bars based upon what Steve says here. So all throughout time, people have basically acted and reacted the same way in the market as a result of greed, fear, ignorance, and hope. This is why the numerical formation and patterns reoccur on a consistent basis. So, try to understand what's going on behind the scenes from an emotional level with people in the chart patterns. It's kind of a hobby of mine, and it makes me feel better and stronger about taking the position. So, all right, so that's that. Oh, all right. Maybe 2 years. Has it been that long, Steve? Yeah, I guess so. Yeah, I guess so. Time flies when you're having fun. I'll tell you what, Steve Burns has taught me so much. I mean, such a good teacher, patient, and just knows a lot. And so, yeah, read Steve's book. Listen, go to his Twitter channel, and if he says something in this channel, pay attention to it. Merritt says, Reminiscence of a Stock Operator is perhaps one of the best books. I also strongly suggest the audio version. The reader is very good at keeping the focus on the book all the time. Yes, I agree. I've listened to the audio version as well. All right, everybody. Well, let's get to work. And let's go down through and see if there's anything interesting today. So Apple. Apple's been down, it's been up, it has earnings after the bell. It's certainly something I don't want to get involved with here. If there was no earnings, I wouldn't be buying it up here. It's just too high. There's not a good risk to reward. I want to wait till we have a pullback back into the value zone. As you can see, the last couple times it came into the value zone, it was a good time to buy. Unfortunately, for the way I trade, there was no valid setups, but you know, we could easily have a 6 or 7 or 8% move on Apple to the upside or the downside after the bell. So better to stay clear of this. Personally, if it does go down, I will be looking for a possible buy back down here at the 50-day moving average. You know, with these big monster stocks, there are, you know, the large financial institutions, they are looking to buy dips on these monster stocks. They want to get them on sale, right? And the 50 day moving average and the 200-day are really the two moving averages that they key off of. So, you know, the way I look at this is if they do miss and it comes back down to the 50, I think I'll be in good company by trying to buy down here. You know, interesting. I also studied one-on-one with Dr. Alexander Elder, and he's a psychiatrist also. He's the author of The New Trading for a Living, one of the best-selling trading books there is. And, you know, speaking of financial institutions wanting to buy these major dips on these stocks, you know, he told me, he says, Greg, people buying stocks, it's the only industry where people don't want to buy something on sale. Anything else, you want to buy it on sale. If it's a better price, you're more interested in buying it, whether it's clothes or a car or anything else, right? But for some reason with stocks, they always want to pay full freight. The higher the better, right? And it's just like anything else. I mean, when things go on sale, that's probably when you should buy them. But I thought it was interesting because it's true. You know, people don't want to buy when it's low. They want to buy when it's high. They want to pay full retail instead of paying wholesale. So, but not these large financial institutions. That's why they wait for these deep dips before they get involved. Oh, give me 1 second. I got to move. Puppy situation. Okay. So anyway, we will see what happens with Apple. I will be looking down here about this 195 price if we miss earnings. So we'll take a look, see what happens tomorrow. AGQ, double leveraged silver. You know, we're extremely high up here. We're above the fourth ATR channel, is up today 1.5%, which is nice. But for me to be interested in getting into AGQ, I need the 5 EMA to cross back under the 20 EMA and then cross back over. That's a good valid signal to enter into a long position on silver. We did this exact thing back here on the 10th of July when we went under the 5, went under the 20-day moving average and then closed back above. We did buy it here. I bought it here because I bought a full position of what I consider a full position on AGQ because it was in the value zone. It's double leveraged, so I took a half, but if it was way up, I would have taken a quarter. So not to confuse you, but yeah, it did take a regular dollar position here when we had the 5 cross over the 20, and you can see this was just a monster trade. I did run out of shares here, so I will be waiting for the same thing to happen, or we move back into the value zone and look for a V1, V2. All right, AMD has earnings after the market today. I did point this out to Mount Doji. We are back in the value zone. However, we do have a lower high right below us. This is lower than this high. So for me to get interested in this now, I need it to wash out that first low, which, you know, maybe some kind of buy down in here, but nothing today on AMD. Amazon, you know, I was looking at Amazon yesterday at the 50-day moving average. I considered buying it intraday, but I decided not to, you know, basically because generally I buy most of my positions at the end of the day. Then when at the end of the day, it was a little bit too high for me to buy. The time to have bought it would have been intraday, but of course that we only know that in hindsight. But so I did decide to pass on Amazon yesterday just because the RSI was a little high. I felt like there was going to be some resistance up here. I'd have to go all the way back down here for my stop. Today it gapped down quite a lot. Did attempt to move back up, but right now it's just right at the 50-day moving average, like almost to the penny. So that's showing you some of the strength of buyers at that 50-day. I mean, I look at these moving averages as groups of buyers, and you know, as it came down here, some groups of buyers stepped in. If this fails, there'll probably be another group of buyers down here at the 100-day moving average. So tomorrow at the 100-day moving average, if it got there, we'd have a 35 RSI convergence at the 100-day moving average. So, you know, probably depending on Apple, what's going to happen. But if we go down tomorrow below the into the low 30s, close back above the 100, I may take an entry there tomorrow. Boeing. So, you know, this is interesting in the fact that we did create a V1 today, right? And we also did bounce off the third ATR channel. This, you know, this is good. This is good, but this is an interesting chart, and there's some nuances here that I want to point out. This is a valid V1, and it is nice that it rejected the third ATR channel. What concerns me, however, is this previous low here, right? This was support. Now we broke through it to the downside. This is going to act as resistance to the upside, not 100%, but likely. Right? So if we bought here at the end of the day, there is, you know, one group of sellers likely that's going to come in here with some resistance overhead. And, you know, if I took this trade, my stop would be halfway of the washout bar right here. So see, like it can continue to go up. I mean, I don't know how high it's going to go up, but I have to look at a theoretical resistance point, and that's really right there. So I am not going to take this trade for that reason. So I hope this makes sense. Here we have this low. We moved up. This is going to act as some support. We broke through the support. Now this low is resistance, and we're right back. We're very close to that, right? It's not surprising that even though we had a big day up, it is not able to get into that zone. So just a small nuance I wanted to make you aware of, you know, and it is a lower low. We have a MACD convergence. The momentum on the downside on this low is stronger than this low. So I'm just going to let Boeing go here right now. All right, Alibaba. So Alibaba was outside the 1 ATR channel. We had a V1 to the downside yesterday. Here's day one, day two washes out, day one closed below. We are not now back in the value zone, which is good because now it's going on sale a little bit as per Dr. Alexander Elder. But now, you know, phase one, we're in the value zone. Phase two, we need to move sideways. Phase three, we need to V1, V2. And Mount Doji, do we have to wash out this low here? No, we don't, because we came from a higher high. That's only happens when you have a lower high underneath you. So nothing on Alibaba today. Caterpillar. Well, nothing there. Yeah, really nothing on Caterpillar. We were under the 1 ATR channel. We've moved up now. You know, it's possible we could have a higher low V2 tomorrow. We're down, we move up, we go down. You can see this bar is washing out this bar, but tomorrow would have to close back above that bar to trigger. So that's a potential, something to look at. ProShares is the Dow. Of course, we've been talking about this. I've been waiting for this. You know, again, buying up here over the third ATR channel in this range is generally not a good idea. The risk to reward's not good. We are now back in the value zone, so now it's becoming interesting. Now I need this. Now I need the bars to move sideways. The longer, the better. Have a nice spike down reversal with the V1 or V2. So nothing yet on DDM here. We did take a nice trade back here on the 6th of June, a good risk to reward when we were under the 200-day. We closed back over the 200-day. My stop would have been any close below the 200 for a small defined stop. But if it went our way like it did, I just scale out, and I scaled out all the way right up to about here. So that was a really nice trade. So again, give yourself a good risk to reward ratio. If you're wrong, quickly get out. If you're right, be patient with the position as long as it's going your way. Walt Disney, working on a V2 to the downside. Here's day 1, day 2, day 3, day 2 washes out day 1. This is very close to closing below day 1. Also notable here, guys, is that we had this previous high. We moved back into the value zone. This is exactly what I was looking for to buy, but I didn't have a trigger and it took off without me, which is okay. But yesterday we broke out. This resistance now becomes support to the downside, but even though that should be support, it failed. And so not only are we close to having a V2 to the downside here, we also have a false breakout. So this was the breakout and it failed today. We're back in the old range. So I'm not going to short this, but just to show you, this is a good example of a false breakout to the upside, and actually also a double top with a bearish divergence. You can see the move up here. You can see the height of the bars. Then on this move up here, we have higher price, but lower bars, meaning that this move lost momentum. And now it's confirmed. The divergence is the double top bearish divergence is confirmed because we closed back in, or it looks like we're going to close back in the range. Etsy, tag that third ATR channel, waiting for it to come back into the value zone to look for another entry, just like we did here. It moved up, came down, moved sidewards, spike down, reverse back up. Here's our V2, day 1, day 2, day 3, day 2 washes out day 1, day 3 closes above day 1. We did enter here, had a really nice move to the upside. I was just talking about on Walt Disney, the false breakout to the upside and reversal. That's exactly what happened here. So we did go ahead and exit the balance of the position here, but that was a nice profitable trade. But nothing on Etsy. It has earnings coming up this week as well. Ford Motor Company did have find some support down here after earnings at the 100-day and the third ATR channel. We do have this bar is washing out yesterday's bar. So if we had a V2 tomorrow, might be a possibility, but nothing today. Facebook. So this is one of those tough ones because we had a false breakout to the upside here, reversal back down. We are certainly in the value zone. We did have a nice V1 today. Here's day 1, day 2, day 2 washes out day 1. Looks like it's going to close above day 1. Also rejected the channel. We're still over 50 RSI. That is all good, but what I do not like is we did not have much sideways movement. The more sideways movement, the more the market's telling you that the sellers are depleted. When you have these V formations, they're less likely to have easier upside because all the people that sold up here or that bought up here are going to be looking to sell if it gets back there. That's why V bottoms are tough thing to form. Usually you get something like a W bottom, something like that. So you know, listen, I mean, it's valid in the fact that it rejected the -1 ATR channel, formed the V1, but it's, to me, it's a little invalid because it had such a strong down move. We also rejected the 20-day moving average already today, so I'm gonna let this one go. You know, somebody certainly could make the case for this. If I did buy it, I would use halfway of the washout bar as my stop. So probably, you know, right about here, a close below here. But I'm going to pass on this one today. 5 below. Woo. Well, found initial support at that 200-day, lost it yesterday, and then it all just kind of broke loose today. You know, I'm gonna give this one more day, see what happens. Right now we're at a 32.31 RSI. If tomorrow we went under the 30 RSI and then close back above the 30 RSI, we close under the third ATR channel, back over the third ATR channel, I would be interested in taking a look at this, but I'm gonna wait one more day. Gold, you know, had this nice move up back into the value zone, which is where I started looking for it, but I just did not get an entry. I mean, technically this was a V1 entry here. Here's day 1, day 2. Day 2 washes out day 1, close above, but it was too high in the channel for me to take that trade. You know, I showed you the 520 EMA cross on silver. We had the exact same entry signal back here on the 30th of May when we had the 5 crossing over the 20. I think I said 30 before, but yeah, the 5 EMA crossing over the 20 EMA. And you can see this was a nice trade all the way up to here. I did scale out all the way there. So gonna have to wait for something like that. Google had this huge move on earnings. Critical point here today for Google, because here's the high of the gap up day. At these elevated levels, you kind of have to look for some kind of support, and that should be the support. That's exactly where it's hanging on. If it closes below that, not a great sign, but certainly I'm not interested in anything on Google today. I needed to pull back. Goldman Sachs opened lower, did trigger a V1 today, but it's super high elevated levels, so I'm not interested in anything here. I need a pullback. I need a better risk to reward. This was a trade we had back here on June 26 when we closed under the 200, over the 200. We also triggered this fractal. Again, this is a good risk to reward. If I'm right, I have a lot of potential upside. If I'm wrong small. And this particular trade we bought here, gapped up, failed, I think, the 70 RSI here, but this was like a 3.1 or 2 or 3% trade in just a few days, so this was a great trade. IBB starting to come to life. On IBB, I am now waiting for a 530 EMA cross. So the blue line crossing over the gray line, that's the 5 exponential crossing over the 30 exponential. So when that eventually happens, I will take a long position, but nothing today. You know, we were talking about having hope for your positions, and honestly, I did like this setup so much because we came down, we moved sideways for a long time, we had thorough washout, nice V1 back into the value zone, but next day, boom, right again. So I know it's hard to do from a human level, but you know, if you can try to just look at each trade as one of many trades, don't try to get have too many emotions for one particular setup, because you know ends up just disappointing you sometimes. So you know, try to have the mindset, this is just one of the next 1,000 trade. It's either going to work or it doesn't. Intel down today. If you guys remember, I said I thought Intel looked pretty shorty there yesterday because we had this big down bar. We rallied back to halfway of the bar. We still had the third ATR channel above us. On the big down day, we had big volume. On the up day, we did not have as much volume. So that really did look shorty to me. And it was, but didn't have the trade here in this account. So Russell, we talked about. Boy, Russell is quite strong compared to the rest of the market. Maybe we'll hit that second profit target today. That would be nice. Look at this bar. This is ridiculous. Johnson & Johnson. Nothing there. Coca-Cola. Big gap up. Nothing there. Lockheed Martin. Did not like that one ATR channel. I would be looking... here we have this big move up. I'd like it to come back down to about halfway and then get a V1. That would be excellent, but we're just going to have to wait. I want to see a V1. We had a V1 exactly right here back on, I guess it was this day, back on the 29th of May. We had to move up down into the value zone, look for a V1. We got it. We scaled all the way out to here. So when you guys hear me talk about V1s, V2s, waiting for the value zone, you can see what these kind of trades can achieve, but you have to be patient. And so, it's not there yet. But again, this is a big up move here, halfway of this big bar should lend some support. You'd also have some support at the 20 EMA and then look for a V1, V2. So I am definitely keeping my eye out for that. MasterCard went down. Amazing. That thing never goes down. We are back in the value zone. This bar is too big. If we could see a move sideways for a few days and a V1, V2, get back in that baby for possibly a ride to the upside, but not there yet. Merck had earnings. It looked like it really went up. But it was really sold into also. So I'm not interested here on Merck. It wouldn't surprise me at all if this continued to go up. It is holding this support of this previous resistance now. 54 RSI. MACD looks like possibly it's going to move sideways, going to cross to the upside, but this is a big bar to the downside. Looks like the close is going to be lower than the open, so I just can't bring myself to buy that yet. Microsoft, nothing there. Netflix, I'm looking for a close back above that 200 because now we have a higher low. I mean, if it goes back up, we'll have a higher low in place. People that bought here, when it ran out of gas, they sold here, this moving it down. If it's strong enough to move forward from now, then you have this whole group of sellers that bought here, they sold here, these sellers are gone. So close back above the 200 with this formation in the next few days. I would certainly buy this. Nike into the value zone, lower high. So if you want to look for a V1, V2, we now have to wash out that low. Philip Morris down today. All right, so PayPal. Oh man, we only have 12 minutes. I am going to go ahead and take an entry today on PayPal, and I'll show you why. This is called triple screen trading. This is what I learned from Dr. Alexander Elder. But you see how the monthly we're definitely in an uptrend. Weekly, we've come back into the value zone, which is normal, right? I mean, any big uptrend like this is going to come back into the value zone on a slower time frame and a shorter time frame, excuse me. So monthly uptrend, weekly into the value zone, right? This is on a weekly standpoint, it's possible that we could bounce here. But now I want to go down one time frame further and see if I can get an entry signal to get me back into this weekly trade, but on a faster time frame. And this would be it. We did get down to, let's take a look. We got down to about a 32 RSI today. So we got into the low 30s, we reversed back up, we did trigger a V1. I understand this is a big bar, but there's other considerations here too, and that we tested those low RSI levels. We went under the 100, we went under the third ATR channel, now we're closing back above. So I will be entering this today. for a full position based upon the V1, the close or the under the 100, under the third ATR channel, and then the nice triple screen formation where the largest time frame is in an uptrend, medium time frame is in the value zone, and then the trigger is on the daily. My stop will be essentially a close under the 100-day moving average. So definitely going to be buying PayPal today at the end of the market as long as it closes above the 200 or above the 100. So I'm just going to go ahead right now while I'm thinking about it. And enter this position in market on close. All right, market on close. All right, that's taken care of. All right, cues. False breakout to the upside, down in the value zone, nothing there until we have a V1 or V2. Snapchat had that big day up on earnings, but nothing there right now. The SPY, we'll be buying that again at the end of the day after that overnight loss. Square, lower high situation. So on Square, looking for a V1, it would have to wash out this previous low. SSO, back into the value zone, but we need some sidewards movement to V1, V2. Tesla, nothing there. I'm sorry, TLT, nothing there. Tesla, big strong day today. But we had this huge move down. If you take from here to here, we're starting to get back in the halfway of this move. So I don't like that. Twitter, big up after earnings, but nothing there. UNG finally found a little bit of a bottom. UNH we have, based upon that V1 higher low close back above the 200-day. So this one is moving our way today. Oil, big day back up over the 200-day moving average. I don't like it though because it's a downward sloping 200-day moving average. So I'm going to wait on that. Dollars very strong. VIX is definitely moving our way. You know, I have the second profit target here. I guess it's possible to hit that today. We'll see. Verizon had a V1 back to the downside. We now have a lower high. I'd like to buy a close under the 200 and back over, giving us a higher low close back above the 200. Walmart moving sidewards there, still in the value zone. Like tomorrow, if we went below and above, triggering a V1 up against this small bar and still in the value zone, that would be excellent. Energy Select. So, you know, we took almost this exact same trade last time. Here we had day 1, day 2, day 3. Day 2 washes out day 1, day 3 closes above day 1. We tested the 50. We closed back up into the zone, in the value zone. And we had a nice trade. I mean, we scaled out, got out of the rest of the position when we lost the 200. Today we have pretty much the same thing. Day 1, day 2, day 3. Day 2 washes out day 1, day 3 closes above day 1. Thing is though, on this particular stock now, the washout bar is here, halfway of the washout bar. I would essentially have to use the 50 as my stop, and from here down to the 50 or the halfway of this bar is longer than from here up to the 200, which would be my theoretical profit target. So for me right now, the risk to reward doesn't make sense on this. Financials had this strong move up back in the value zone, but we needed to move sideways, maybe V1, V2. Real estate, big day today, but nothing there that I can see. Utilities, lower end of the channel, nothing there. Healthcare, nothing there, and pharmaceuticals. Well, you know, this is technically a higher low V2. We move down, we move up, we go down, we take out the low of this bar, we trigger the, looks like the close is going to be above. It's just that I don't think it went high enough for the people that bought here to really sell into that. Carrie Lavorne, who taught me this, he likes a move up into the channel and then at least 2 days down before you get the V1. So I'm just going to let that one go. So really the only thing on the docket today for my interest today is PayPal, because we have the monthly strong up, weekly back into value. So this is where it should start catching some bids. And so I want to switch to the daily, which is a faster time frame, and look for a quicker entry. And this is valid. I mean, it's a V1. It rejected the lower 30s RSI, close above the 100. So this looks pretty good. I am going to buy this at the close. And then Mount Doji sent over a couple charts that he wanted me to look at. Actually, before, let me see. Honeywell, that's okay. IWM, that's fine. SPY, going to buy that at the end of the day. UNH is moving up, and VIX is really moving up. All right. All right, so here's Mount Doji's charts he wanted me to look at. First one was CRM. So here we have a lower high, and I think Mount Doji, the reason you sent me this is because we have a lower high. We have to wash out this low. We did wash out this low today. So if that's what your intention was, to sending me this chart, really, really good eye. It did trigger a V1 today. However, this bar is just too big. There's just too much selling that happened in this bar. You know, if you have a bar that has a huge amount of selling, why would the next day, why would it just magically be able to like go right back up? I mean, it's possible, right? But likely people sold up here for a reason. So it might have a kind of a dead cat bounce, but you know, I'm not surprised it got right here to the halfway of this bar. So I wouldn't be interested in this because the V1, it did trigger V1, but it comes off of this big old bar. But it did wash out that previous low after having a lower high. So good eye on that. But so I wouldn't be interested in Salesforce, mainly because this big bar. Remember, you want to have a small bar to get your V1 or V2 up against, less than 1 ATR. And then IPI. So listen, I mean, this is a good setup here. Except it's a beautiful V1, right? We rejected the 200-day moving average. We triggered the V1 right here. We definitely look like we're going to close above, but now I feel like you're chasing. You're too high. I don't want to take a V1 outside of the 1 ATR channel. Now, if you took this intraday right here, it makes a lot of sense, but I don't, a lot of people trade V1s, V2s intradays. It's not a problem to do. If it enters here and then untriggers by the end of the day, you just get out. But I don't like to have to sit in front of my computer all day and look at these. If I was sitting here and saw it, maybe I would. Oh, we have 1 minute left. But right now, I just feel like this is too big of a bar. It's too big to chase. I think we just sold our second IWM. Well, that's good. If I were looking to get back into this trade, Mount Doji, if it were me, I would look back for a pullback back here now, maybe to see if it holds halfway support. So I hope that makes sense. I think we just hit a second profit target on IWM. Yeah, we did. Wow, how about that? Oh, the market's not closed. I thought it was closed. All right, I saw the light still blinking. It was confusing me. All right, so we got another profit target there. So I think we're okay on everything. Honeywell is holding above the halfway. IWM just hit that second profit target.
Order partially filled.
SPY, we bought that again at the end of the day at 300.72.
Order cancelled.
All right, So we did take a loss on that today. UNH continue to move up our way, and VIX had a nice day as well. And so we ended up buying PayPal at 112.04. Right at the close. 112.04, yeah. 112.04. All right, so I did have a green day today, which is nice, especially, you know, the market being down. We'll see what happens with Apple. That should come out here soon. Should be interesting. But listen, if you have any questions about anything I did today, please just type them into the chat. I'm very happy to clarify or answer any questions that you have. But just real quick, before I get to the answer section, I do want to let everyone know that I do offer private one-on-one coaching and teaching lessons in the evening time via Skype. So, you know, if you've been thinking about getting a lesson with me, just reach out to me, send me an email. My email and my hourly rates are in the description, or you can send me a message on Twitter. But, you know, having the live stream here, I know is helpful. I know it's helped people. They've written me many, many emails telling me about what they're learning here helps them. But you know, one-on-one lessons are still better. You know, there's things lost in translation. We don't have any back and forth in real time. Well, I guess it's real time, but not person to person. But you know, generally, if you're interested, how it works is it generally starts out just with a free phone call or a free Skype call. Where I just want to get to know you a little bit better. I want to understand your trading methodologies, how you got into trading, what your challenges are, you know, and what your goals are based upon your financial situation, based upon how much screen time you have available, what your risk tolerance is. And then what I'll do is I'll take that information and I'll put together a custom lesson plan to help you achieve those goals based on the information that you gave me. So if it's of interest, please reach out to me. I think you'll be happy that you did get the lesson. I've never had anyone that hasn't been happy, or at least maybe they lied. I don't know, but I don't think so. And then, you know, if you like this live stream, if you like this channel, if you like today's video, please do me a favor and hit the thumbs up button. It does help Google promote the channel more. And I've had a lot of people email me and say, you know, my trading is really, I really look at trading differently now. And I've had, you know, I'm starting to have some wins. I'm not used to that. And so there's a lot of people out there that have very difficult time trading from a financial standpoint, emotional standpoint. So, you know, help me share this channel, tell your trading friends about it, maybe share it on social media. And at the very least, if you can hit the thumbs up button, I would really, really appreciate it. So, all right, well, enough of my plug, and let's see if anybody has any questions. I was rambling there.
Order cancel.
Merritt says, this is exactly what Jesse Livermore says in the book, if you remember. He likes to buy high and to sell low. Yeah, you know, there's kind of a conflict on that. Some people say I like to buy high and sell higher. I like to sell low and sell lower. And then you have other people, I guess like Warren Buffett, that are, you know, want to buy things on sale and sell them high. So, you know, all sorts of different ways to go about it. But I was kind of referring to Dr. Alexander Elder, who said, you know, stocks are the only thing people don't like to buy on sale. Max, hey, Max B, how you doing? Good to see you. Max B, Boeing also has low volume today, at least now. Let's take a look. Well, like I said, it did have that V1. Volume did pick up over yesterday a little bit. Maybe that volume snuck in there at the end. But again, you know, this is a good example of, yes, it's a V1. Yes, it rejected the third ATR channel, but I don't like that the previous range is so close. I mean, it's almost... I mean, look how close it got. Why did it stop there? Well, probably because we have the resistance of this previous range. So always take those previous ranges into account. The best false breakouts are the one that just come down and immediately reverse back up, not the ones that go down, 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 and then trigger, because then you've got the previous high. Like I think Square was a good example of this. Yes. So this if you guys remember, this is a trade we took, but here we have a low, we rally, we come back down. See how we came down for one day and immediately bounced back up into the previous range? It just poked its head out, didn't like it, boom, right back the other way. So look at this, right? Low, high, low, bullish double bottom with the bullish divergence, false breakout. But the best breakouts I've seen are the ones that are just one bar and immediately go our way, compared to Boeing, where we broke down. If the very next day it went back up, much better. But see how we broke down, then went lower, then reversed. So you've given up a lot of the move already if you were to enter here. So I hope that makes sense. Murat says there's also a gap in the opening of Disney. All right, let's take a look. Yes, there is, Murat. However, if you're basing this off of, it didn't trigger a V2. Wish I could do this in real life. That would be a V2, right? But yes, it gapped down, so that would invalidate a V2, but it gapped down intraday, it filled the gap, and then went back down again. Now that makes it legitimate. If it just gaps and goes, that doesn't make legitimate for a V1 or a V2. But here it gapped down, then you see how earlier in the day it reversed back up, filled the gap, and then came back down. It's like the gap never happened, so that would be legitimate, but it didn't really close there. It closed there, and it did not close below the previous day one's close. Mount Doji says, PayPal was on my watch list heading into the stream. Quite the dip. Yeah, it is quite the dip, and it's always scary buying these dips. Everyone's always waiting for these dips, but when they come, they're scary as hell, right? But what made me buy this today was the triple screen. Monthly time frame, obvious uptrend. Weekly time frame, back into value zone. So I could wait for a V1 or a V2 on the weekly if I wanted, but it's going to be a while, and it's going to maybe have to have 1 or 2 weeks sideways and then a V1, V2. Or I can go to the smaller time frame, which is the daily, and look for an entry, because again, monthly uptrend, weekly in the value, which is good. So then I want to go to the lowest time frame, which is the daily, and look for an entry. So I don't know if I'm going to be right on this at all. I mean, but it is a signal, right? It's a rejection of the 100. It's a rejection of the low RSI. It's the V1 signal. So if I'm wrong, I'm probably wrong from here to here. And if I'm right, I have a better risk to reward. Murat said, in 3D chart, you put the stop by looking at the fastest moving chart. Oh, in the triple screen? Different people do it different ways. Okay. On the monthly, we're moving up. On the weekly, we're in the value zone. You can either Cooey girl, quit that. You could either take the signal on the daily and then manage it from the weekly. The daily is just getting you into the trade quicker, and then you could manage it on the medium time frame. That is also a way to go. I've tried all sorts of different approaches to this. I traded it one way before I met Dr. Elder. I traded a different way after I met Dr. Elder. He generally will use the earlier time frame to get you in the trade, and then he'll switch back to the weekly to manage the trade. But me personally, I'm just going to manage off the daily because I'm just so used to dailies. So You can do it either way, Muret. Johnny says, after close, could you please look at ALB? I purchased it on July 9th at 69.67 and it had a trailing stop of 2 ATRs. I sold it today at 72.41. Okay. Take a look real quick. Okay, you bought it on 7.9. Looks like on that V1, right? 7.9, yes. Oh, nice. At 69.67. Man, you got it right at the low. Had a 2 ATR, a stop loss trailing stop of 2 ATRs. I sold it today. Yeah, I think it's a great trade. I mean, today's the day to sell it because it lost both the 5 ATR, the 5 EMA and the 10 EMA to the downside on a closing basis. So, whether was that your 2 ATR move? Let's see. Currently, 2 ATRs is about this big from the high. Yeah, it's down about 2 ATRs. Yeah, excellent trade, Johnny. I mean, great way to look at it. Whether you're using a 2 ATR as your stop or you're just, using getting stopped out from below with your price going underneath the 5-day or the 10-day. But congratulations, that was a nice trade. That was, you bought it down here almost at the low. That was a 5% trade, my man. Congratulations. And if I was looking at this, I'd be looking this to come back into the value zone and buy that, rinse and repeat. Look for another V1 or V2. Johnny says, I am just wondering if you see a reason I should have sold it sooner. I can add to my rules. I'm trying to maximize the trend. Not really, honestly. I mean, the only thing I could think about sooner would have been 2 days ago when we lost the 100-day. That would be a possibility, but that's easy to say in hindsight. We never really had a close below the previous day's low. So, and then yesterday looked bad, but then it looked bullish at the end of the day. No, I mean, unless you just wanted to unload your position at the third ATR channel, but you're anticipating that that's going to be it too. And anticipating to the upside is just as bad as anticipating to the downside. But I mean, I guess you could have, it didn't even quite tag the third ATR channel though. But no, I mean, this makes the most fundamental sense to me as far as getting out. Now, of course, I like to phase, Johnny. And so I would have got some right up here at the top. That's the nice thing about phasing. If it moves up, you're always going to get something near the top. Always, always, always. So that's my other thought on that. But if it's just a one entry, one exit, this makes sense. I mean, you're never going to quite get the top, right? When you have one entry, one exit, because you're going to wait to be taken out below. And so you're always going to have to give a little back. Max B says, do you ever use relative volume spike as signal? For example, IBB had a nice relative spike of bottom on 725. Let's see. I mean, yes, I do use volume in the equation for sure, Max. Generally the way I read volume is if something is moving down and down and down and the volume's getting more and more and more, that means to me that there are more votes to the downside. On the opposite side of that, if you're starting to move down, go down and down and down on lower and lower volume, then I believe that's the weak hands selling at those lower volumes. if you're moving up and up and up on higher and higher and higher volume, that's bullish. If you're moving up higher and higher and higher, but the volume's getting less and less and less people are excited about buying up there. They're still trading up there, but less people are excited about buying. So, generally when I see, like, to me, this down bar here with the big volume, this would have been bearish to me, but it went the exact opposite way. So it doesn't always work. But yes, I mean, I do look at volume certainly in my buying and selling decisions. I mean, we don't know if this is a climax or not. I mean, in hindsight, it does look like it was, right? But there's two different ways you can look at volume increasing on the downside. You can look at it as bullish or bearish, but I generally look at it as bearish if the lower you go and you get more and more and more. I'd rather look at the bar itself as far as some kind of climax move, like a open here, go all the way back down here, close all the way back up. That, because I can never really tell with the volume whether it's a climax bar or not, but with the bars, I think I can tell better. Murat says, Greg, you are mostly on large cap stocks. Have you tested your approach in small and mid caps as well? So Murat, my theory on this is that these technical indicators work because other people are following them. So like with the 200-day moving average, if I'm above the 200-day moving average and then I'm coming down to it, the reason that I believe, kind of like what we were talking about before with the fear and the greed and the anticipation of groups of people with their emotions, when I look at PayPal, would I be a buyer down here? Yes, because I know there are going to be lots of other people looking at this same level. And I want to get involved. I want to go long a position when I know there's going to be other buyers, right? It just makes sense. You don't want to get long position when there's not going to be any more buyers, because if there's no buyers, it's going to go down. So the reason I like to concentrate on large cap stocks, well looked after stocks, people that, they see these big monsters, is for the very fact that there are going to be more people on those large caps looking at the same stock, looking at those levels and coming in at those levels. On smaller caps and mid caps, I'm sure they do hold some significance, but the more people that are looking at them, the better, and therefore probably the better the signal, because more people are coming in and seeing them and coming in. So that's why I tend to shy away from small caps for sure. And mid caps. I mean, I really like to trade the biggest and the best and the most followed stocks, because I feel like the technical levels have more support there because they're being looked at by many more people. Hope that helps. Hey Frank, good to see you. Thanks for coming by. Appreciate it. Hi Greg, would love your thoughts on GE before earnings. So much is baked in the cake. Good old GE. Well, it's just hard to know on earnings. You just never know. I really can't even give an opinion. I mean, this was good. We moved up. We moved down in the value zone. We moved sideways. We had a nice V1. That's good. MACD's positive. We're above the 50. We had a lot of volume come in today, which indicates to me some buying, but it all doesn't mean much, Frank, because of earnings. And, you may have bad earnings and it goes up. And you may have good earnings and it's already baked in the cake and it goes down. That's why, just as a rule, I will not buy in front of earnings for that exact reason. So I wish I could be more help on that, bud. Murat, triple screen. Yep. Okay. So I talked about that. Your thought on Netflix. Okay, JT. I'm looking at Netflix. So I would certainly buy this if we had to close back above the 200. And here's the reason why. We had this big gap down, JT. The sellers were in control. Finally here, the buyers came in control. So there was obviously some buying here in hindsight, right? Then we moved up to the 200 day. And if you guys remember, I was talking about after this deep dip, you're probably going to have some resistance at the 200 day. And it's exactly what happened, because the people that bought here, they were patient, they held, but once it failed at the 200, they're like, I'm out. This is a nice profit from here to here. I'm out. So all the people that bought here sold here. Now these sellers are gone. These sellers are gone. Now, I'm not saying it not going to come down and test this bottom, but if it's now strong enough to continue back up from here, now the people that bought here sold here. That whole group of sellers is gone. So not only would we have that's why I like higher lows. So, here we would have a higher low break above the 200. The reason I don't like lower lows is because people that are lucky enough to get the bottom usually sell that first rally. That causes it to go back down. But if it's strong enough after it's gone down a couple days, if it can trigger a V1, V2, or close back above the 200, you have easier movement on this, because a whole group of sellers are out of the equation. Again, they bought here, they sold here. That's what moved it down. But if it can move up now, you don't have as much overhead. You don't have any sellers to compete with. So yes, 100%. If it closed above the 200, I would buy it. If it then closed back below, I would just get out. But if it closes above the 200 and keeps going, then I feel like it has good movement. So, let's not anticipate it. But yeah, this is probably one of my favorite setups of all the stocks I'm looking at right now as it closed back above this 200. Johnny says, okay, I'm greedy, just wanted more. No, I understand, but I think that's the completely valid place to have taken that. If you're just waiting for prices, your stops underneath you to take you out, maybe unloading at the third ATR channel would have been the other issue, other opportunity to do that. But that's easy to say in hindsight. I think we talked about this, Johnny. You're looking to be taken out from below. So if you're doing that, then you're always going to have to give some back. Frank says, I did purchase GE earlier today at 1032. Okay, well, I hope those earnings go up, buddy. Hey, 1032 though, that's nice. So, oh wow, you've almost made a couple percent on that. Are those earnings today? No, they're tomorrow. Okay. Well, I'll be rooting for you. Frank. JT, I did get out the 200 MA at a nice profit. Oh, okay. So you bought the deep dip then, JT, is that correct? I imagine if he got out there. But see, that's exactly what I was just talking about, JT. People that bought that dip sold there because they had a nice profit. You, as well as a ton of other people, did the same thing. That's what moved the price back down. But now you guys are out of the way. You don't have any more shares to sell, right? So that's why if we can break back above the 200 now, that's a better entry point, because you have less supply above you. That's why I love higher low V2s or V1s, especially when they happen over the 200 day, because that's another level. Nice trade, bud. Good job. What was your buy signal down there, JT, if you don't mind me asking? Got in at 219. 219? I think the low here was only 305. Maybe 319? That would make more sense. I think you mean 319. But fantastic. Nice going. Did you get back in when you went under the 30, back over the 30? That's the trade I see there. All right, has anybody heard about Apple? It's up 70 cents, so I don't think it's come out yet. 319, that's what I thought. Be sweet to get in at 219. All right, so nothing on Apple yet. Well, geez, I did have a good day today. That's for sure. I'm thankful for that. As a matter of fact, I think I hit a yearly high today, within a few dollars. I'm just eyeballing it, but I might have to take myself out to dinner tonight for that. But yeah, I think I hit a yearly high today. I'm not getting cocky, just mentioning. By the way, if you guys ever feel like you're starting to get cocky when you have new highs and all this kind of stuff, correct yourself right away, because it just goes to show you that maybe your mental state is changing. You always want to be humble. You always want to be respectful of the market. Always, always, always. And when you start making new highs or new lows, that's when people make the most mistakes. So, if you catch yourself like I just did, remind yourself to always come back, be humble, follow your rules, right? RSI 7 below 30. And okay, yeah, makes sense. Nice trade, man. Nice trade. Congratulations. All right, well, all right, guys, I'm going to head up in the mountains. So if you guys have any other questions, last chance. Otherwise, I'm going to get out of here, go up in the hot heat in the mountains, and stomp around up there. All right. Well, listen, thanks everybody for coming by. I really do appreciate you spending your time with me. I hope this is helping. If you have any other questions, you can always just email them to me or send me a message on Twitter, and I'll get back with you as soon as I can, hopefully with a good answer. Merritt says, I almost blew my account 3 months after doubling it in 6 months. Yeah, well, I mean, with those kind of moves, you're going to have high emotions, right? You're going to feel like really, really smart or not so smart. But with those big moves, it generates a lot of emotions, and that's why you're having those big swings. But I'm glad you didn't blow the account, Merritt. Just my advice, buddy, my advice to everyone: position size small. It will keep you in the game. It takes care of so many issues. Because you position size relatively small, you're not going to have those emotions, and you're going to trade better. Johnny says, I made a penny today during regular hours. Sweet. Hey, man, there's some days where if I would have made a penny, would have been a lot better than some of the days I had. This is years ago when I used to trade bigger, but not anymore. Max says, charts are charting emotions of people. What about the notion that 80 to 90% of trades are driven by algos? Well, a lot of them are driven by algorithms, Max. The recent study that I heard was 60% of all movement is driven by algorithms, and 20% is driven by large institutions, which only leaves about 20% of price movements driven by us. But remember, those algorithms are programmed by humans. So, and there's some biases that are put into those programs by the people trading them. So it still is coming from humans because humans had to program it. Does that make sense? And algorithms, they're really turned on during the daytime, after the first hour and before the last hour. other people come in other people come in the morning and the afternoon, and they generally turn them off or turn them down because those algorithms work best when you're not dealing against a lot of other people and a lot of volume. Hey, Apple's up $4, everybody, in after hours, so they must have had good earnings. $5 now. Wow. All right. So it looks like Apple had good earnings. Up $6 now. Fantastic. All right, everybody. I'm going to head out over there. Oh,
order cancelled.
Murat says they are also coding like if it meets 200 DMA. Do this, do that. Yeah, that's right. That's exactly right. All right, everybody. Thanks for coming by. Hope to see you tomorrow. And again, if you have any questions, you can email them to me or Twitter them to me, and go out and do something nice for somebody today, right? It's going to make you feel good. It's going to make them feel good. So just a good policy. So I'm going to get out of here, but thanks again, and see you tomorrow during the last hour of the market. Take care, everybody. U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation, and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.